I'm Dr. Fasonya. Most of you already know who I am. And my team member, Dr. Ozude. And we have our guest today, who is Dr. Fawole. Dr. Fawole is a pediatric anesthesiologist. She is a founder of Savvy Doc in real estate. She's also the host of Short-Term Revolution Bootcamp and podcast. So she began her journey as an investor during residency, and over time, she learned to fund deals both traditionally and creatively. So having pivoted to short-term rentals, she now helps other physicians amplify their wealth using short-term rentals. And she's able to do this whether you buy the property or not. So she's going to be talking on both sides of being an investor and being an active participant in short-term rentals. After she's done, Dr. Ozodi also had some experience in short-term rentals. He can also give us some of his experience. And then we open up for question and answer, which is, we hopefully have a lot of time for that, so that, I know many people have been asking questions about short-term rentals. Okay, let's actually get started with Dr. Ozude, actually. Can you tell us a little bit of your experience with short-term rentals?
Absolutely.
5 minutes, and then
absolutely. Happy to share.
Fawole, take it from there.
For sure, happy to share. So I kind of fell into my short-term rental. I've been investing in real estate in general since 2018, and mostly focusing on large multifamily. But I had a townhouse that I purchased in 2016. And before I got into multifamily, I actually had the idea of developing a large single family home portfolio. And when I made the switch to multifamily, I had this townhouse that I, didn't necessarily think I needed personally. It was supposed to be the first of many, and I was planning to move out anyway. So moved out a year ago and decided to keep the asset. I'm a big fan of holding. And so I didn't want to sell it. I wanted to figure out how to make it a true asset, something that puts money in my pocket. And so that's kind of how I got into the short-term rental market. There's other options, you can do long-term rental too, but, I think the idea of having a short-term guest as opposed to a tenant was very attractive to me, especially in the middle of the pandemic. So that's kind of been my journey. It's been an interesting journey. I'm in Houston, Texas. It's a very saturated market. Townhouse is in a good location for weekend rentals. So I'm really happy with the weekend occupancy. We're still trying to figure out how to get weekday occupancy up. So there are some, headwinds to face and figure out, but overall, it's been a good learning experience, and definitely happy to answer any other questions about that. I definitely defer to Chagozie with way more experience. I bet she has a few more than one. So.
Oh, definitely. Okay, take it away, doctor.
Just confirm that you can hear me well.
Yes.
Okay, great. Okay, good evening, guys. I am super, super excited to be on with you tonight. We've been chatting in the background about this conversation, and I was like, you know what? I love your people, because here's what, okay? Not too many physicians, now I'm making an assumption, but if I'm wrong, then please correct me in the chat, okay? Because people generally tend to attract people that are like them. So I assume that y'all are probably physicians. Is that right? Or is it a mixed group? Can you just correct me, please?
There's a mix, but there's a primary focus on physicians and healthcare, but there's a mix as well.
Okay, that's fine. That's perfect. All right. So I'll just alter my language to reflect that. But I'm super excited to be on with you tonight, because what I'm about to show you, when I heard about it myself, it was like, wait, hold up. What are we doing and why are we still doing it? Let's switch over stat. So I'm going to share my screen with you so that we can get right into it. So confirm that you can see my screen.
Confirmed.
Beautiful. Okay, so today we'll be talking about your cash flowing short-term rental. Okay, August 31st, I forget the year now. I think it was 2020. August 31st, 2020. We were mid-pandemic and I was expecting my third baby, okay? And I went to see my OB and they did a little ultrasound and I'm there watching the ultrasound and I'm thinking, now, I don't know OB ultrasound, but that baby's legs look a little too close to that probe. And having had a history of a preemie, my second baby was a preemie. Let's just fast forward and say that at that point, like shortly after that like aha moment, I got pulled from work, okay? And when I got pulled, like as that whole conversation was happening, I was just thinking to myself that, wow, because when I saw the maternal fetal medicine doctor that was telling me that I have to, stop work, he was like, yeah, so on Wednesday, we'll see you in the OR. I'm like, what do you mean by see you in the OR on Wednesday? I'm like, wait, hold up, no. I'm like, I'm on call on Thursday. And he said, no, you're not, right? Because my mind was still thinking like this, I mean, you can't just pull me like, I mean, like, we can't just take off time off work like that, right? He's like, no, you're like, that's it. So anyway, long story short, I take time off and I'm thinking the whole time, what if my salary was my only income? Like, what if I didn't have my husband who was working? I didn't have all those like insurance, different things. If I worked locums, like this is just how people's income can get cut. Now, prior to all of this, I had already been investing in real estate, right? We already had our long-term rentals. We had bought, multifamily, done even syndications, if you will. And had began sort of growing, like over time, we had built a portfolio that was starting to churn out, somewhat meaningful income. But then when that happened, I was like, okay, how about those who have not built any of this? And I was already coaching people at the time. And I remember that they'll always ask me for like, what is it in real estate that can get you money fast or like get you money like in the next month or two? And I'll always say like, nah, I don't have anything. But when I had that experience at work, I knew that this whole talk of multiple streams of income is not a luxury. It's not something that is like, okay, let's maybe possibly think about doing a side gig. No, like this is real life. If you do not have, or if you've not started thinking about and working towards actually building formidable vetted streams of income, we need to work on it stat, okay? So who am I? I'm Chagozie Fawole. I help physicians get started generating meaningful income from real estate in meaningful time. And you could probably edit this to say I help physicians and professionals get started generating meaningful income from real estate in meaningful time. Like I just told you, when I had that experience, it made me start to kind of think very actively about meaningful income. That's number one. So income that could actually help your life if something happened, not just $200 a month, $100 a month, no. Income that when you actually saw, you're like, ooh, I got a paycheck. You know what I'm saying? That's what we're talking about. And if you can build this up, but it takes you 5, 6, 7 years, I mean, great. But how about if you can accelerate that time and actually get it to a point where it's actually meaningful in a short period of time? So in that 2020, when I got pulled from work, I actually started hunting. I started looking for that thing in real estate that I could get myself and hopefully help others to start to get. And the first thing that came to me at the time was called rental arbitrage. It was short-term rentals, but without buying the property, okay? And when I tried to actually start it right when that incident happened, like in October, my buddy told me, girl, you better sit yourself back down because you are pulled from work for a reason. Like you can't be hustling all over the place trying to get all these things done while you're contracting. So no, we put it on pause. We put it on pause. Baby came in February. So March 8th, March 9th, I was like, all right, we're doing this. So now I was on full maternity leave. And I told them, I was like, I'm not coming back. I'm like, if I took 5 months before the baby got here, baby is here now. I'm not about to like abandon her at home to now try to rush back to work. No, it's not happening. So I took another 4 months. So within that 4 month window, I was like, wait, baby's now 1 month old. I returned to work in June. I need to build this thing up stat. Like I need to actually like build this thing stat. So in those 3 months, I was now able to go from 0 to 10 short-term rental property or short-term rentals without buying a single one of them. Okay. Now I have a whole story and I'll get into all of this, but I wanted to just kind of highlight to you how fast or how slow or how meaningful this thing can build if you choose to build it. Now, the model that I used at that time was called rental arbitrage. I have since now moved on to going back to what I was doing before, which was actually buying properties. But now I have now moved from just buying, I chuckle when I get to this point, but just buying like, class B property, like duplexes, just to turn out like $200 a month, $400 dollars a month in cash flow, to now buying prime cream of the crop, lakefront type properties and helping my clients and my people do the same, buying properties that generate, like I said, meaningful income in meaningful time. Somebody type in the chat, meaningful income, meaningful time. Let me just make sure that I have people that are participating here with me. For the record, I love to do call and response, okay? If you've ever attended any of my trainings, any of my events, you know that the chat is always popping. So I'm hoping that this is no different. Let me see if I can actually pull up the chat here. Okay, so I'm still waiting for something to get in the chat. There we go. I've seen the first thing pop up in the chat. So you guys are live and active. I love it. Now, while you are here, I don't know how your community runs, but introduce yourself and meet someone in the chat. Let me get to know who you are so that it's a two-way street. I can actually get to know you, get to see how I can help you. I can alter my talk. Like Baya said earlier, like I talk about this stuff so much that if I had to like drop my whole slides right now and talk live, I could probably do. I don't plan to do that, but if I could. So type in the chat, let me know who you are, your dreams, your goals, your aspirations. Let me know how much you would like to be making from real estate on a regular basis, so that way we can know basically how to tailor this stuff, okay? All right, so which of this describes you? Which of this describes you? Number one is that you need another income stream, but you have no idea where to start. Are there any beginners in the room? People who just like, what? Oh my goodness, real estate, this sounds interesting. Let me just show up. Type it in the chat. Let me know who you are. Okay. How about this one? You are, oh no. Okay, I think I edited this. Okay, so, or you may already have an idea what you actually want to do. Oh, I think I edited this funnily. Okay, there's a second thing that I want to know. Are you, before we get to team passive and team active, that there are supposed to be two more things on here. So, you need another income stream. That's number one. Number two is that you've already actually started. Like you already invest somehow in real estate, either in your own deals or in other people's deals. That's number two. Okay, that's number two. And then number three is, you know what? I don't just do other people's deals or my own deals. I actually own and operate short-term rentals. So like I'm just here because I like the topic. You know what I'm saying? Right? Just that way, that'll be number three. And that way I'll know that, that's who we have in the audience. Okay, let me just see the chat because I can't see it right now the way I have my screen set up. Where is the chat? Okay, I'll see it eventually. Anyway, so I'll probably be seeing the chat at the end of this talk. So if you put a question in there, I may not see it right away just because of how it's set up. Okay, so now, the second thing that I want to know also is, are you on team passive or team active? Okay. When I say team passive, I mean those of you who are like, listen, I love you all, but I'd rather you just take my money, okay? Like, I don't want to deal with tenants. I don't want to deal with termites. I don't want to deal with toilets. I don't want to deal with whatever. Just, I'll give it to you. I'll give you as much as you want. Just type team passive in the chat, okay? And then the second group of people will be those on team active. You're like, I happen to just be on here because, it's a group of investors. I just do my own deals myself. Like, teach me how to do it. I'm going to go in there. I'm going to do it all by myself. Type team active in the chat. Okay, we're still setting up. I know I take a second to set up because that way it actually works for you. And now the third thing that I wanted to know is, or are you both? Okay. You do your own deals, you buy your own property here and there, but then when the right opportunity comes up, let's say Dr. George and Dr. Bayer bring you a good deal, like, oh, that's a sweet deal right there. Here's my money, I'll invest. If you do both, let me see that. I'm going to pause my share for a second so that I can actually read the comments in the chat. Okay, beautiful. Thank you, guys. Okay, so meaningful income, meaningful time. Perfect. All right. Good. 120K. Yeah, I love it. 30K passive a month. Someone is in Detroit, Michigan. Ortho fellow. I love it. You're in the right place. You got mentorship. I like you already. Okay, so property too that he can use itself also as a short-term rental. All right. Okay. Okay. All right, guys. I love it. Okay. So team passive, willing to manage. Okay. Okay. Perfect. So let's get back to my screen so that we can talk now about what we got. So today, now having operated now over 11 short-term rentals at different points in time, we've now thinned our portfolio out. Okay. We've also done remote operations. We've now hosted multiple, hundreds of guests. I would like to now just kind of show you what we have to show you today. Now, I come bearing gifts, so you either stay till the end or watch the replay. I'll suggest that I actually stay till the end because we'll have a question and answer time at the end, okay? But I actually have a gift that I prepared especially for you today, okay? So I'm going to show you how now you can generate meaningful income from short-term rentals, whether you own the property or not, okay? The first part of the talk is going to be about the hype about short-term rentals. Like, why is it that, I mean, you look left, you look right, everybody's now doing short-term rentals. I mean, what is it about short-term rentals that is just like creating such a hype? I personally call it the short-term revolution, and that's what we call our podcast, and that's what we call our boot camp. I have a book coming out eventually, maybe at some point we can actually get to it, probably like January maybe, okay? But I'm going to be showing you why physicians all over the country are turning to short-term rentals, okay? And those of you that are not physicians, remember I said, my primary thing has been with physicians, so a lot of my language is physicians. I'm not ignoring you. I'm not being disrespectful. That's just my, crazy little habit. I love doctors. All right, number 2, I'm gonna be showing you money-saving leads. I call them like Cyber Monday-like tips for funding your next, short-term rental deal with less money. I know that when these amazing docs are raising their capital here, they're trying to like get like 25% down for the equity raise and whatnot. Short-term rentals, nope, none of that. Unless, of course, you do it, a different way. But for the most part, as a personal short-term rental, you could probably get in. I'm going to tell you when I get to it. All right. And then my third goal, okay, is to show you how to analyze deals so that, whether you're doing your own deal yourself or you're like investing in your friends, uncles, brothers, wives, short-term rental deal, you know exactly what you're looking for. So don't just go buy anything just because it breathes or looks like a short-term rental. All right. And then because I'm talking with a group of passive investors, or at least a good number of you are, I'm going to be showing you questions to ask when considering someone else's deal. Sound good? All right, perfect. Okay, so what's the hype with STRs? Why are so many people turning to short-term rentals? The answer is travel is back, okay? So back in 2020, we went from like everybody traveling to boom, everything shut down, COVID, right? The short-term rental market at the time even went to like a screeching halt. But then as time went on, okay, travel started kind of coming back, and 2021 was like a raging year for short-term rentals. It was like people were like, get me out of this house. I need to get in there. And I know that in the past year, it's gone from like raging to kind of like more typical now, okay? So we're not like crazy 2021 anymore, okay? So let's be real here. I'm not here to make things seem like more than they actually are. There has been a slight cooling off in the short-term rental occupancy, whatever, but it's not a crazy cooling off, but it's not like as raging hot as it was like back in 2021. So it is still a valid asset class, okay? And it's definitely one to reckon with, because when people are traveling now, they now have options compared to hotels, okay? COVID helped us to kind of think about COVID safe getaways, right? Instead of going to a hotel where you're with everybody else, you take your family to a nice little cabin where you get fresh air, hang out with like maybe 10 or 15 of you, lakefront, use the water, all that fancy stuff that you couldn't otherwise do in a, even in a fancy Marriott, for example, okay? The other thing is short-term rentals have more cash flow, hands down. Hands down, there is more cash flow with short-term rentals, okay? And here is why we have more cash flow with short-term rentals. When you have a long-term rental, I think of it like you buying this entire pack of Poland Spring, of bottled water, right? When you have a long-term rental, you usually have it out on a year-long lease. So the person you exchange for stability, cash, right? So let's say you had a tenant move into your long-term rental. That tenant will probably pay you like, $4.99, right? Like, $1K a month, for example, right? Now you take a bottle of water out of this pack and now you put it in a vending machine and now it's $1.50, okay? Same thing with short-term rentals. Long-term rental, $950, $970 a month, right? That's the same place will go for like $100 a night. Okay, so you can make way more with short-term rentals than you would with long-term rentals. So just to show it in a different way, unfurnished long-term rental, $1,250 a month. Make it furnished, $2,500. Even break it down a little bit, it could even be even more when you break it down to smaller rental, units. Okay. Now I actually took out a property that so this is actually a property of ours. So remember I said that we own a number of duplexes. This is actually a property of ours. It's a long-term rental. This is the property right here. As a long-term rental, this is in Syracuse, New York. One unit of that property is generating ours rents for about 1,000. So the average in the area is about 1,200. So it's kind of on the lower end. Okay, so in a year, that comes to about 14,800 roughly. Okay, I use the same property to run numbers on the tool that we call AirDNA. So AirDNA is a tool that we use to project our possible income. And I'll show you a link in a second on how you can access that. So the same property as a short-term rental, if we were to turn it into a short-term rental, this is not even this is not in a vacation area at all, 33,000. So just a very modest example. Now this is, so if I turn both of these into short-term rentals, this property that I bought for all in maybe 120 could fetch me 66,000 if I turn both units into a short-term rental. Now, whether I'll actually turn this into that or not, it's a whole different conversation, okay? But just as a number of like projection, just to give an idea of what can happen, all right? So if you want to see, you can even like try it on your own house, let's like plug in your own address just to see for giggles what your house could net as a short-term rental. The key word there is could, okay? You can just screenshot this link, and when you hop off and you want to play around, you can go to one of our resource pages to get that. All right, so another screenshot. So I basically just went randomly and went somewhere in Pennsylvania, property for sale for $325,000. I plugged it in onto AirDNA, and here is what came out as possible revenue. So you buy the property for $325,000, you could make this as your annual revenue, okay? And I love multifamily. I came from multifamily, but I'm just using multifamily just to compare, okay? What properties are you looking at these days that pull a revenue of $70,000? How many units do you need to buy to pull a revenue of $70,000 for a long-term rental? Just keep that in mind, okay? Similar thing here. Now, this is in Pennsylvania, so you wouldn't see these numbers just about anywhere, okay? I'm showing these numbers just to kind of pop your eyes a little bit because I do want to show you the potential, but just keep in mind that it's not everywhere that you can see numbers this amazing, okay? This is amazing. So property value or property price for sale, $274, projected revenue, $106. Those are the numbers that I saw.
All right, seriously,
okay,
I
hold
just
on.
did top properties on AirDNA. This is in Pigeon Forge, Tennessee. I just want to kind of show you what inspires me. Okay, look at this number. This person, $557,000 in revenue for 2021. Look at that average daily rate right there. I'm gonna scroll down. Okay, so that's like the top property, right? Let's even go down to the person that's like at the bottom of the top properties page. Look at that, 265 in revenue, right? Anyway.
Yeah, so I did that quick recording, just kind of show you what I was seeing on AirDNA. Now, a number of these very popular places, the prices have also gone up significantly because everyone is like literally rushing. So the way that we do ours is that we find secondary markets now, places that like don't really make the headlines or like the STR headlines, but still have those good returns, even when you compare it to the purchase price, okay? One of the myths that I always try to debunk whenever I talk about short-term rentals is, number one, that you have to live in a touristy area, okay? People think about the Smokies, the Gulf Shores, Alabama, the Miramar Beach, like all these like places that people actually want to go. You can literally do, like people travel for different reasons. Travel for Thanksgiving, for work, for medical care, and even Some don't even travel, like insurance claims. So say for example, you have, a pipe burst in your house, like those down in Dallas, for example, right? When the whole thing froze over, people need their places to stay while the insurance companies fix their places. So some people are getting paid real bank to have people in their properties because of insurance. And these guys pay quite a bit. Okay, there's a whole niche for midterm rentals for insurance claimants, and these guys pay a bit. But one thing that actually struck me when we first began with our short-term rentals was people just coming for staycation. Like they will leave their house and they'll come to our place just to get away from home, same city. And I'm like, interesting. I can do that, but sure, whatever floats your boat, right? So if you have any of these things around you, a hotel, a hospital, an airport, or university, right? You could have a viable short-term rental. Okay. The key thing is to make sure that there is something in the area that brings people there, something in the area that attracts people that need a temporary places to stay. Okay. So your tip number one, and I'm calling the Cyber Monday tip number one. I know we're like a couple of days from Cyber Monday. But just play along. Tip number one is to see if the numbers work to invest in your city. The numbers have to work, okay? And I'll show you in a few how to actually see those numbers. So you can go on that what's it called, AirDNA, and play around with a bunch of addresses and see, okay, you know what? Will it even work in my city? Like, if I buy a property for this amount, will I be able to make a good amount from the short-term rental side of things if I do that? All right. Why do I have this again here? Okay. So, oh yeah, here we go. So I asked the first time if you have hotels, airports, and all of that, but if you also have any lakes, any beaches, any mountains, or convention centers anywhere around you, it could work. Our place in Dallas is right by convention center. Up here in Syracuse, we now focus on lakefront property because there's apparently a demand for those up here. If you have any of these around you, like Georgia, Blue Ridge Mountains in Georgia, for example, the beaches, Jersey Shore right here. Like even if your city or town doesn't have like a short-term rental, loudness to it, if you can find the little local beaches that people go to that nobody hears about, you may be able to find a little known place that could still make bank. But what if you want the big old flashy vacation rental, right? You can still find those. You can go onto Zillow and, type in, Pigeon Forge, Tennessee, or Gatlinburg or whatever. Now, those will cost you a pretty penny and they may make you returns, but you have to define what your goal is when you're buying any of these, okay? But the first reason that I mentioned that people turn to short-term rentals, the first reason is cash flow, okay? Now, here is the thing. I've just shown you like beautiful luxury like cabins in the Smokies, right? If you are just thinking in long-term rental speak, you're thinking, holy moly, wait a minute, that property is almost $900,000. How am I going to pay for a property worth $900,000 to go invest, okay? And if you have a ton of money in the bank account, of course, the answer is simple. I mean, just pay for it, right? But as a traditional investment property, you probably have to cough up 25% of that, okay? But here is tip number two. If you can spend any time in the property, okay? And I have a particular lender that understands the language so well that he does 90% of his business as short-term rentals. They can give you legitimately a second home loan, and you only have to put down 10% if you are willing to spend any time in the property. So somebody please tell me, just type in the chat and just humor me for a second. How many of you would have a problem with staying at a lakefront property, just a night or two, just so that you can fulfill your occupancy requirement and only put down 10% for that lakefront property? Please tell me in the chat how many of you will be willing to bear such hardship of staying at a lakefront property or like somewhere in the Smokies with like great mountain views. I'm so sorry. I just have to go materially participate and just like occupy this property for just a night, just so that I can spend this thing at my lakefront property. Right? Right. Gee, I'm seeing sign me up. It's such a hard life. My wife will not let me come back home. I can suffer through a few days. You guys are amazing. I mean, when I heard this, I was like, I can deal. Some people say, some banks, oh, 14 days. I'm like, whatever it is, 14 days, 10 days, I'm fine. You know, like even these days, I go to our property. Ours is like, it's like 30 minutes from here. I go there just some days and I just like get refreshed, just watch the water and just feel the calm. And even just thinking about it right now, I'm already like, oh, getting calm, right? So short-term rentals are amazing like that. Like they can literally be your, like I even give some talks sometimes of wealth as wellness, okay? Where you can build wealth in one hand and build in your wellness goals, building your family bonding, family reunions. This last summer, my family, like my parents and brothers and sisters, they came over to spend time at our lake house. And my dad was so grateful. He was so thankful. He was like, oh my goodness, this, like, thank you for like basically creating this experience for us. That's another thing that you can create with short-term rentals, okay? Now, this property that I just showed you, that was $898, $500. I also just showed you now that you can buy it for $90K, okay? With the 25% down, $90K would only have bought you a property worth somewhere around $360. So now, you take the same amount of money, and now you can now buy 2.5 houses, right? Plus, each of those properties can now churn you out cash. And here is the fun part. You don't have tenants, okay? And I say that part kind of chuckling because a couple of days ago, I was at my husband and I was like, listen, I think I still want to buy a couple. I think I still want to buy a multifamily property. I think I want to buy like a 47-unit apartment complex. And he goes, well, I mean, basically like, he was like tired of me saying it. And he was like, you know what, you can do it, but I will not be involved. Basically saying, because he has now like, I think I have officially, with my short-term rental thing, I officially weaned him off his love for tenants, okay? Just the idea of having a property that you don't have to actually like take care of tenants, he's just so excited about it, okay? Anyway, but you don't have to come up with that with as much money. So it's more accessible. Those who feel that they don't have a ton of cash to put down, there's that, right? Like I said, you can now use your cash for more. So instead of putting down 25%, and you put down 10%, and now you could possibly buy, 3 properties if the third one is a smaller one with the same cash, not counting your closing costs and stuff. All right. And third thing right there is, of course, the cash on cash return. So when you drop from putting down 25% to 10%, your cash on cash return goes up. That changes your cash on cash return significantly, particularly when you add on the fact that these properties generally make more. Okay, so I'm going to give you my first case study of the day. This is one of my amazing people. I mean, I told you guys I work with other doctors and professionals to help them get started with this. When she joined us, actually, she wanted to do rental arbitrage, which is the method that I told you earlier, where you don't buy the property, instead you rent and then lease it out. Now, by the time we worked together, she actually found that with this 10% down thing, it's like, oh, I can find 10%, right? So her mind, initially she thought, I can't invest in, any of these things because they're so expensive. But then by the time we worked together, this is actually her beach home now in Panama City Beach. When I spoke with her sometime in, I think it was July, I asked her, I was like, how much have you made so far? I think she got this property. I forget when she went live. I don't even want to tell a lie right now. I forget when she went live, but by the time I asked her, like midsummer, she was like, oh yeah, we've made $22,000. I was like, wait. This is the person that told me that she joined my group because she felt like she didn't have money, so she was going to do the cheap one. And now in just a few months, she had made $22,000 in revenue from this property. Okay, so now let's talk about analyzing a deal for profitability. Because after all that I've just told you, some of your minds are probably like spinning. If that's you, type it in the chat. Some people's minds are just like churning right now. They're like, wait a minute. I have $50K in the bank. Okay, I can go just like buy something for $500,000. Ooh, where can I go? And you're probably like squirreling, right? I'm like, okay, hold on. I'm not done. Because you got to buy something that's profitable, okay? I don't want anybody going out there and buying a money pit and blaming it on me. Saying that check because they told you to go buy a short-term rental. That's not what I said. Buy a profitable business, all right? Now, when you're thinking about buying a short-term rental, a couple of things that you must think about will be, number one, the purchase price. the purchase price is the first thing that you want to look at, because that would, in real estate, we say you make the money when you buy, okay? You make the money when you buy. Nothing, oh gosh, in the past year or two, some people have been saved by their, by their heels, by all the, property value growth that has happened. But let me tell you, where we are right now in the market cycle, you need to know what the property is worth and even go lower when you make your offers. So make good offers, make great offers. I can tell you in the past week, maybe week and a half now, I've had about 3 offers accepted, and each of them were low offers, okay? In one instance, I got a guy to sell me 2 of his properties for less than what he would have sold one of them for twice, okay? Now, make sure you get that purchase price right. How do you find out the purchase price? Go on Zillow and look at what properties have sold for in the past 6 months. Be very careful. If you see a property that sold in May or even March, April, May, I wouldn't use that as a true comp. That may be a comp when it comes to getting an appraisal done for your loan, but for yourself, I will favor more of comps that were purchased like in September, October, because the market turned a little bit, okay? In March, April, May, everything was still raging hot. By July, August, September, things started cooling down a little bit, and now we're now seeing sort of like what may be our new true comps, okay? So use the more recent numbers if you can, and then even make an offer lower than that. So for that to actually work, you will have to make lots and lots of offers, okay? So that you can get something that actually makes sense. Our interest rates have also gone up. Oh, by the way, this is my calculator, my calculator that I have here, and I'm going to show you in a second how you can get a hold of this. This was the gift that I promised you, okay? Now, so on this calculator here, you see like all the loan details. You can plug it in there for a monthly payment, and then you get your cash layout is more than just the down payment, right? This is your 10% down, okay? Your closing costs, you have to furnish the place. That's the thing with short-term rentals. Your cash on cash calculation with short-term rentals needs to include the furnishing. Now, if you buy a short-term rental that is already furnished, hear me, still plan for some amount of furnishing, okay? Because if you do things the way that I teach my people, you will be working towards a tasteful short-term rental that doesn't take into account what was happening there before. Like one of the offers that we have accepted right now is actually an existing short-term rental, and it's coming furnished, but I'm still planning for my furnishing costs, because when I put out a product, I want it to be on point. People will pay for an on-point property and give you great reviews and come back, and you can blow your AirDNA calculations out of the water when you do it very well. So factor in all that. Now, on the income and expense side, I keep my stuff very simple, okay? Some people do underwriting and they have like 15 sheets and multiple modules and multiple projections. Dude, I keep it simple. This may be the simplest calculator that you ever see, but guess what? That's why my people end up doing deals and getting things done, because we don't sit there and like overanalyze, okay? It's very simplified, all right? But you take your income, I use the annual revenue from AirDNA, okay? and then I think about any possible add-ons or upsells or fees. So let's say you have any guests that stay late and you charge them, like a late checkout fee, for example, right? You can put that there. Imagine how many you have a month and then just plug that in there. And then your expenses, as with your long-term rentals, your taxes, your insurance, your maintenance, your management, your utilities, your repairs, those are all built into this. One other thing with short-term rentals you must factor in will be your cleaning costs, okay? So for this example here, and you guys will see this when you get the calculator, I did a little video for you as well. The cleaning fee, when you have it on Airbnb, the cleaning fee is like a pass-through fee, right? Where even if someone is staying for 1 night or 10 nights, you probably have the same cleaning fee. But you're also spending that same amount or even more or even less with your cleaners. Your housekeepers will come in, they'll clean the place, okay? So this may seem like a lot, but your guests are paying for this. The reason that I have this on my calculator is because when I use AirDNA also factors in the cleaning fee, okay? So keep that in mind when you use AirDNA. All right. Another thing with short-term rentals that's different from long-term rentals is that you have to provide some supplies. Okay. So this is like tissue paper, coffee creamer, those little things in the house that, keep the place looking good and being marketable, right? Of course, you pay for utilities, you pay for internet subscriptions. Here it's like, all the little things, the tools and gadgets that we use in our business, like let's say Price Labs, for example. That's like a software that we use to automate our pricing. Okay. And then other maintenance things like lawn care, snow removal, the occasional, maintenance item that could come up. Now, I put here HOA or condo fees. I personally do not like HOAs or condos for the simple reason that they can simply meet one day and decide that, you know what, you can't do short-term rentals here anymore. And I don't like that, okay? So I put it here just so that you can factor it in, but I prefer not to even be in a place that requires that. All right, so last thing that I'm gonna show you on this slide is right here, the cash on cash return. With short-term rentals, you can still get cash on cash return in the 20s to 30s, depending on where you are. You have to look, you have to find the place. You probably won't find these in the big markets, okay? But it's still possible. All right, so here is the link to my gift, like I promised. You can screenshot this. You can take, if you have a spouse's phone or something, you can take the QR code. But when you get to this, it'll have you enter, like a quick whatever info. Just put that in there, and then it'll take you to a page that has like a bunch of our things, and then you scroll down to the bottom and you can see the calculator. Okay. All right. Once you've screenshotted and you're good, I'll go to my next slide. All right. So if the first loan type that I told you about, the 10% down, that one is a fully qualifying type of loan where you actually need to have like good credit and all that stuff. If you have bad, like either bad credit or let's say like your student loans are still on your credit, like a lot of us still have, there's something called a DSCR loan, okay? It's a debt service credit ratio loan. And there are specific lenders that will do it with short-term rental specific things. Like not your regular multifamily DSCR lenders, they want to see the leases. They want to see leases, but you don't have leases as a short-term rental host. So when you're talking to lenders, ask them if they do DSCR loans for short-term rentals. This is becoming a whole new lending product that you can ask for. And we have a couple of referrals in our world. All right. So again, this is asset-based, it's non-owner occupied. They don't ask for personal income, and they don't care about your debt to income ratio. All right. So for some people, that is a game changer. Okay. All right. I almost left this out and I was like, holy moly, you can't forget about the tax benefits. Okay. Let's just talk about the tax benefits real quick. So this is a big one. A lot of people are going short-term rentals now because of this reason. Okay. So if you have a property that you rent out on average 7 days or less, so this is not your midterm rental, this is a short-term rental, okay? 7 days or less is your average stay. So if you take all the stays you've had in the year, add them up together and divide them by the number of actual bookings that you got, if the average is 7 days or less, then you meet the first criterion. And you materially participate, okay? So this means that if you are engaged in running the property, there are different tests of material participation with this, okay? Different from the long-term rental real estate professional status rules. Different, and I'm going to tell you in a second. If you do these two things, and I'll specify these in a few, the paper losses that you generate from depreciation will be considered non-passive. So some of you may have run into a situation where you got all these like depreciation losses, and then your accountant says, okay, that's great, but we're gonna have to suspend it until next year because you don't have any passive income to offset, right? If that's you, if you were like me, had like all these like rental property losses, and then you're like, wait, but here you still have a tax bill over here, right? This is for you. Because passive in real estate, passive losses offset passive income. Non-passive losses offset non-passive income. So if you were able to do this with a short-term rental, it'll be considered non-passive, and you can then deduct it from a W-2 and reduce your tax liability. Okay, so I'm going to sort of kind of move a little quickly here, but just to show you as an example, you can take a 500K purchase, you deduct the 50K for the land, let's say as an example, okay, that is with 450. So 450, somewhere around 25% of that, depending on who you talk to, right, can get you bonus depreciation in the first year of being in service of about 112K. So let's say you can now take this off your W-2, right? It'll be, depending on your tax bracket, this could give you a tax savings of $41,000. Okay, so just by shifting, by the way, remember, for this 500K purchase, you probably put down 50K. So you've almost made back your entire down payment by getting this thing done. All right, so material participation. A couple of things to note. 100 hours and more than anybody else. That's the first test. Another test is 500 hours with no regard to others' involvement, okay? So this is actually, like, you actually have to be involved. Some people just do this in Q4. They buy a property in Q4 so that they can just use this one. And then in the next year, they can have other people manage. But if you're thinking, I want to buy a couple of these, a bunch of these, you can actually work towards this one, okay? Now, if you're like crunch time, the year is almost done, but I don't think I can get to 100 hours, there's another test that says you can do all the work, okay? And if you can show that I did all the work, this can count. All right, so we have a couple of minutes left. I'll just mention this last thing here, which is that you can work full time and do this. So unlike the real estate professional status requirements that you can't work full time, this one will actually allow you work full time and do this. And this is why we have now made this like basically the main thing that we focus on in our Savvy Duck world, because I'm like, yo guys, let's just be efficient here and let's just get you short-term rentals, right? All right. Now I showed, so this is another case study. This actually happened like a day or maybe 2 or 3 days ago, on Thursday actually. This couple joined us about 6 weeks ago, and they literally closed on Thursday. Like, I'm like, guys, you guys are like sprinting. 6 weeks, and they went from not knowing a thing to knowing, to being able to close. So now, because they closed about now, they're now going to be now working on getting the place all set up. And I've told them they need to have their listing up already so that they can get a guest in like about Christmas. If you can get 2 guests, right? Two renters, you know, then you can have an average, right? You need 2 for an average. All right, so that's basically where I'm going to pause this here. If anyone, I'm going to stop this just to allow for questions. If I see any need to, show any extra slides or whatever, I'll go to those. But I feel like in what I've shown you so far, you should have what you need. Oh, no, there's one more thing actually. No, hold on. There's one more thing. And that is the part of the passive investor. Let me just show you this part real quick. So 1 second, how do I exit this? I'm not going to talk about arbitrage because you guys are primarily investors. Okay, so caution. If you're thinking that you want to invest in people's deals, there are a couple of questions that you need to ask, okay? The first one is about regulations. Regulations are the biggest threat in the short-term rental industry. And if you're buying a property or you want to invest in people's deals, you need to ask them, have they looked up the regulations? So 3 things: regulations, how much returns, and return of capital, okay? So the first one, regulations. Have they checked the city's regulations, any county regulations, any HOA or condo association regulations, okay? You want them to show you the analysis, and then you can look up the data like I just showed you with the calculator that I shared with you at the link that I showed you, okay? You can look it up yourself. You can have them kind of show you their projections for the different line items that I showed you. Short-term rental insurance is generally more expensive than regular insurance, so they have to factor that into their numbers, okay? And then the last question you should ask is, what is the exit plan? What's the timeline? Are you actually in there with them as an equity partner, or are you in there with them as just a debt partner? For example, with our stuff, we do primarily debt. So we buy properties, we rehab them, and then we refinance. And so we normally partner with people at the beginning phase where we do that part. So we do that. But then some people do equity. So be sure that you know exactly what they're offering. Okay. Yeah. So yeah, if if you click on the link that I shared earlier, this one, okay, you will get the calculator, and then you get access into like our different resources and stuff. And I'm happy to go to Q&A right now.
Okay, Doc. Thanks, Doc.
My pleasure.
Ben, you gave me a lot to think about.
I cannot do that to people.
Yes. I mean, 21% cash on cash return, it's unheard of, definitely. Of course, everything has its own risk and benefit. But, I'm going to be playing around, in my area, soon enough to see what I can do. And now that I have you as a mentor, so maybe we'll, bring one to the market at one point. So let's just do some questions, because your presentation was so fun that I feel like we could go on for like hours on end.
Hey.
So let's find some of these questions. George, if you find them before.
Yes.
Go ahead.
Yeah, I see one question in the chat. So let's address that one first. This one's from Aaron, if he's still on. Not sure if you're planning to discuss, but can you discuss strategies on finding good property managers or co-hosts when outside local area?
Yes. So, sorry, I'm shade this instead. Okay, so here's one of the beautiful things about short-term rentals. The first thing is, even if you're outside of your local area, you can do it too. You can self-manage your property even from a distance. When I had 10 short-term rentals in Dallas, Texas, I never saw them. I have currently thinned that out. We currently have one there now, but I still haven't seen it. The primary thing that you need, and I have a resource actually for that, and it is, I'm going to type it in the chat. If you go to workwithme2021.com/ROG, you will get our remote operators guide. I'm putting in the chat there. You get our remote operators guide, where it basically shows you like the 5 tools that that I use to run a property remotely. And it's a very quick read, but for finding some, if you decide that, you know what, I don't want to manage it myself, I want to do it. Co-hosts, okay, they exist, but they will charge you 25 to 30% of your revenue. Okay, so keep that in mind. Now, what exactly is a co-host doing for you? They're helping you set the place up. You can do that as a one-time fee to a designer. They can help you do that. That was how I set up six at a time. I had a designer to do that. Answering guest conversations. Some people think, oh my gosh, I can't answer all these conversations. You don't, if you have one property, if you're doing arbitrage, I have like 10 and 15, that's a different thing, okay? But if you're buying and you're buying like one at a time, some people say it's somewhere around like the maybe 7 to 8 property number that they start feeling a need to actually have extra help, okay? Because the questions that you get on these, it's like maybe one a day, maybe one every 2 days. So it's not like it's a time suck. So you could definitely do this yourself. Now, the biggest part now is, of course, what is it called? The cleaning, the housekeeping. Housekeeping, there's an app called Turnover B&B. It's available in some cities. In other cities that is not available, you could probably, go on Indeed.com, go on Facebook Marketplace, go on Craigslist to find a housekeeper. My preference is actually like local Facebook mom type groups to ask for, local help. But what I did when we had a place in the house was I hired somebody as my runner, okay? Assistant, runner, you can call them anything you like. And I found her in a Facebook group, and I basically told her what to do. But basically her job was to kind of go after the housekeepers were clean and to help me like stock up items, buy things every now and then. And maybe if a guest was asking for something, she could send it to them. Now, since we thinned the portfolio in Dallas, I haven't had her on payroll anymore. What I now do is if a guest needs something and we don't have it and it wasn't put in when they were, before they came, I'll simply go on Instacart. Instacart is amazing because it can literally get them what they need in like an hour. Okay, so I hope that helps. Aaron, does that help? I mean, if you really want to get a co-host, I would say maybe join any of these like Airbnb host Facebook groups, and then ask for who is available in that area. And then, yeah, my personal preference is self-managing even for remote properties, just because I feel that you really can do a lot on your phone. But if you really like don't want to deal with it, then one way may actually be to go on Airbnb and find listings that are active in the area, look and see who has good listings, and maybe reach out to them and say, hey, I'm about to get a property in this area. Would you mind being my co-host? I'm willing to pay you 25% of revenue. That's one way.
Awesome. Adebayo had a question.
Okay.
Is the DSCR loan a non-recourse loan? And let's explain what non-recourse first, so just to make sure everyone knows.
So a recourse versus non-recourse loan is a loan that, well, so recourse basically means that if you default on the loan, if you can't pay the loan for some reason, they'll come and get you, right? So far, I have found that they're mostly recourse loans, okay? But I'm pretty sure that with the expansion of short-term rentals these days, that you may, this is just me now speculating. But right now, the ones that I know are mostly are recourse. Yeah.
Thank you.
Yeah, my pleasure.
And another question from Ezzy, is the 7 days or less criteria, is that calculated per month?
No, it's the annual. So let's say you bought a property in January, right? You bought it in January, you basically take all the bookings that you got for the year, all the days you bought for the year, and count how many nights you're actually booked. Let's say you booked 200. And then ask yourself, okay, how many actual bookings were those? Let's say those were, I don't know, 40. Okay, so let's say there were 40 individual bookings. Maybe one person booked for a month. Maybe others were like one night, and then maybe a couple of threes, a couple of fives, a couple of. But as long as the average comes out to less than 7, you're good. Now, having mentioned the tax benefits, I always have to say what Brandon Hall said when he came on our conference last year. He said, don't let the tax tail wag the dog. Okay, so don't go chasing tax benefits and buy a bad deal. So make sure the deal works first. Make sure the deal cash flows. Make sure the deal is a good deal. You actually like the property, right? You actually want to do short-term rentals. You know what I'm saying? Before you're like, oh, and then we have tax benefits. So if you're the kind of person that like, you know what, I don't care how easy you say it is. I don't want to materially participate in nada, right? Don't go do something that you hate just because of tax benefits. Instead, focus on how you can go create that $41,000 from somewhere else. And there are ways. Maybe consult, go speak, go do whatever. But there are ways to make that money instead of just focusing on the. But if you're good with playing, play and get that. But if you're like, you know what, then yeah.
Oh, great tip.
Yeah.
And then from Nicole, she wanted to know how to get started if she already has a primary residence, but wants to convert to an Airbnb.
That's a great question. I can actually show you one of my clients that just did that. So I have a client that joined me back in 2020. It's actually end of 2019. So we began 2020. She got her first property under contract in like 5 weeks. And then she went on and basically sprinted and got another 17, long-term rental units. And then I began talking about short-term rentals, right? So now she has all these like properties right all over the place. And she's like, yeah, I think I want to just convert them. So what she did actually was that she turned, I think she's at 3 now, but she basically like started converting, like when a tenant will leave, instead of getting a new tenant, she would just like clean it up, furnish it. Because one thing about short-term rentals is that your place, this is not there. It's not C-class short-term rental. Like if you want to actually thrive, it needs to be spick and span, like hotel style, very beautiful, very clean. If you have a property that, like I closed up a couple of our arbitrage units because the neighborhood turned out to not be good. That even if my sister and my assistant were fine being there, I'll have guests that will come and they'll be like, oh my gosh, no, I'm sorry. I can't park my car here. This space is just so. So if you have a property that you bought as a long-term rental in like a B-class neighborhood, like, or even C+, and you were like, you know what, it cash flows well, but now you want to now take short-term rental, I'll say that's not the one to make a short-term rental. But if you have like a strong, solid B+ property, almost A, right? Then yes, that could work. If you have a personal home that you lived in, I'm going to assume that you're probably in, B+, A, even A+ maybe. Then your next first step will be to look into the regulations of the city that you're in. Okay, look into those regulations and see if it's even allowed in your city. If you have an HOA, see if your HOA allows it. And if you pass all those, now you can now look and see if it'll be profitable, considering your expenses and stuff. It's not all places that have those crazy high numbers. Another thing that I probably didn't even mention was in screening your cities, you want to find a place that gets somewhere. It has to be above 50% occupancy when you look on AirDNA. So I didn't go so far into the AirDNA part, but when you look on AirDNA, it will give you like the total amount that they think you get in a year, but it also show you like your average daily rate and your occupancy in percentage. I like to be above 50%. The closer I can get to 70%, the happier that I am. And here is why that piece is important, okay? Because if you're in a place where the occupancy is already low, if anything shifts in the market, it becomes a race to the bottom on price, okay? But if you're in a place that has strong occupancy, right, you can then shine. You can keep your property price high and now just kind of shine in your operations, and then you make bank. Okay, but so those are a few things that I'll consider. You don't want to be in a place that has low occupancy, because then you just have an empty property that is collecting dust. Yeah.
Awesome. I actually had a question too. What do you see as far as the horizon with short-term rental syndications, like large portfolios that a passive investor or even an active investor can put together or get into?
Yeah. So there's now a lot of talk about short-term rental syndications, and I think it's coming down the pipeline. I think we'll start seeing a lot of those. I know some people are already doing it, because the reason is we've kind of seen this as a true asset class now in itself, that like even banks are starting to now have products for it. Like this whole DSCR thing, you can syndicate it. Like you can find, some good quality SCRs in good locations, even if they're pricey, right? You just form your syndication group or whatever, buy the thing, because the spread, because the returns will probably be higher, you can give your investors even higher returns than they see in the regular long-term rental space. Now, some people are thinking that, as time goes on, we may not see those crazy high returns just because the prices have also gone up. Just keep that in mind. But I think it's a real thing that's coming down the pipeline. I've thought about the syndications myself. I think for us, we haven't been ready to kind of start that yet. But instead, what we're doing is more on the lending side. Like those want to be like private lenders. We have active deals that we're accepting private lenders for, but that's like, short-term income. You don't have to be there for like 3 to 5 years or whatever. For those who like that kind of thing. Yeah.
Awesome.
But it's definitely coming down the pipeline. SDR syndications for sure.
Okay.
Bio, you're on mute, I think.
Yeah. I think there is one that says, please we show the QR code.
Oh yes, that was why
I'm going to make sure I send it in the email too.
Yeah.
We always send email to everyone that came. We also edit and then post it, make sure everybody's okay with it. Then we post it on our YouTube channel.
Yeah.
And people
also put the link in the chat for those who want to grab that.
Okay. And also, can you just spend the last 5 minutes, just talk how people can reach you,
yes,
how they can join your program, what you have going on, and then we'll wrap it up.
Just before you do that, I think Deji from Houston has a comment or question.
Yeah.
Okay.
wonderful presentation. I really enjoyed it. I think you've done you've done a lot of good work here. So much, much appreciated. My question was around, I mean, you've had a lot of success. Can you tell us a little bit about the challenges that you've had? That way we can kind of see both sides of the story and kind of get a feel for what we're getting ourselves into if we choose to go down that route. I personally used to do Airbnb, but I got shut down by my HOA and I was making bank. And then that was a challenge. And that's from then I just kind of moved away from, that. Of course, I know guys that buy properties in areas with no HOA, then the free ride, right? So that was one challenge I had. And, so, and then the international market, are you also looking internationally or just focused on the US? So those are the two questions I had. Thank you.
Those are great, amazing questions. I have looked very little into like international spaces. And when I say very little, it was that I saw someone on one of the groups who had a deal of like 30 something, villas somewhere down in Mexico. And I was like, oh my gosh, this looks so good. But my risk tolerance is such that I like to sort of invest in what I know. And when I have, liquid cash that I want to be speculative, then I can probably venture into that. Right now, I'm still just doing what I'm comfortable with. What I find with the international deals is that unless I have a strong network, or unless because the way that I kind of run my thing is that I spend time learning the market. Like my people will tell you, I learn the market so well that when a property goes off market and comes back on and I see it, I'm like, that's not a new deal. That has been there for like 6 months. You know what I'm saying? Like I look at every single deal that comes on Zillow in my search area. So I usually like to have that degree of comfort that if I were to venture internationally, I would need to know it to that depth of detail. Now, if let's say I traveled now to Spain and somebody took me on a tour and said, you know what, this area, Puerto something is like, it's amazing, it's beautiful. And then they kind of showed me, here are the hot spots, here are places that people go, and I could kind of see it on the map. I can then study that market. And if I have a point person that can help me go check out places, I would do that. So I don't fear international markets. I just haven't, taken the time to learn any particular international market. But I do remote stuff. Like I've looked for deals in Poconos. I've looked down in Crystal Beach, Texas. Where else have I looked? Those have been the two big ones. But right now we are focused on close by. But now to your first question, which is challenges and risk to be aware of, right? The first biggest risk in short-term rental is regulation risk. And like I said, the regulation risk can come at the level of the city, the county, the state. I don't think there's many states that are that broad, but city and county for sure. And then of course the HOAs and condo associations. I personally stay away from HOAs and condo associations because think about a ship versus a motorcycle, right? If you are on a motorbike and you have to change direction, you literally just like yank the thing and you can turn and move, right? For me, that's HOAs and condos. You just need to have one meeting where somebody loud comes and they're like, we don't want short-term rentals. We don't want short-term rentals. Whoa, 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 whoa. And then everybody votes. Those who are there, by the way, everybody votes. And all of a sudden, poof, right? So I felt like those are particular things to steer. But cities and counties, for example, like Dallas, like when our leases were expiring, I was like, okay, should I renew? And I was like, no, I don't want to renew because in the time between when we went live with our first one and a few months ago, Dallas now took up the short-term rental issue as a fight, right? So knowing that, I'm like, I don't want to sign a new lease in the middle of an STR fight. I'm out. Okay, but that's the benefit of arbitrage, is that if you do arbitrage and such things change, you can just end your lease and you move on. Now, if you but the thing though is that even up till now, Dallas has not shut down short-term rental. So cities take a longer time. So you hear about it, you sniff about it, you read things in the papers, and then people will fight. People will actually come out, and they may not shut it down. Instead, they may come up with like licensing requirements and maybe inspection requirements. So to mitigate your risk, if you're going to go into a short-term rental, do not pass go until you have done this one thing, and that is to call the city. Previously, I was teaching that you had to like go online and look up the regulations. Now, in fact, was just yesterday, actually, I recorded a quick live video to my clients. And I said, listen, guys, I know I told you before, check online and make sure. Now you can check online, but don't just trust online, call. So call the city clerk, call whoever and say, hey, are there any restrictions, any regulations, and are there any in the works? Because when you ask that second part of the question, they will tell you, oh, yes, we are thinking about it, but we're thinking that maybe in a couple of months, we will stop offering any more short-term rental licensing. And now you need to get in there, because contrary to what you will think, you want to be in a regulated place. You don't, what happened in Houston, a lot of people that were in the Houston market noticed a huge drop in their occupancy because all the arbitrage folk, everybody, like Houston had no regulations, right? So everybody just like flooded in. But you look at a place like Charleston, South Carolina, there's literally a strip where you can do your short-term rental. And so if you manage to just get that short-term rental in that place, you're talking 194K, in your revenue. Like, I mean, you're good, okay? So what I do, I mean, I just call. I call and I just ask about regulations. Other pitfalls. Oh, okay. This one is my pet peeve. Pet peeve / come on now. You spend $500,000 to buy a property. Please take professional pictures. Okay, just spend the $500 and take professional pictures. Because if your property looks like crap, you would like, it's a competition, right? When you're on the platforms, the more people can see your listing and click on it, the more eyeballs you get, the more traffic you get, the more bookings you get. If you don't have good professional pictures, people will scroll on by, and then you'll be bumped down and down and down, and then you won't get any bookings. The place that I told you that we got under contract, that is a short-term rental right now, that place, when I walked in, I was like, yo, these people did not sell this place well. It actually looks good, but their pictures are crap. So I got the place. Now, but that's just one thing. Second thing about challenges with short-term rental, you want to buy in a place that you can get the hands, okay? So whereas there are like, nice mountain locations, right, that you can, have amazing views, make sure that there are people that can actually clean the property. Make sure that it's not so far remote that you don't have actual help. Some people are afraid of people thrashing their properties. There are ways to mitigate that. For example, your pricing, okay? Like I said, you don't race to the bottom. So when I have clients, I've had some clients, for example, like I can think of one right now who bought a property like at the height of the market. She bought it for like 900K plus. And at that time, her market was looking like it could carry that. But then after she bought it, the market turned. And so she had to do like extra things to get it booked. And I told her, I said, listen, don't drop the price. You can drop the price a little, but don't tank the price. Because if you have a luxury property and you're putting in like, low rates, you will get people that don't want to pay that much. At the luxury level, people generally come in as a family, they take care of the place, they thank you, they send you cards, whatever. When you drop it, then you get the locals, you get people that want to party and things like that. So when people complain about people partying at their place, the first thing that people normally ask is like, how much is your place? And almost invariably tell you, oh, $90 a night. Is like, they're like, oh yeah, people always come here to like smoke weed. How much is your place? $90 a night? We're like, yeah, if 4 friends split $90 in one night, that's $20 a piece. You're basically serving the bottom, and I don't mean this in a disrespectful way, but you price accordingly. Another thing is to keep your occupants, like some people don't do one night stays. Now, this would depend on your market. If your market needs one night stays, you do it. But if your market can carry more night stays, it will also keep out those that are coming to party. Because those who come to party for like one night at a time, right? So if you have like three night minimum, 5 night minimum, in my market, so in the summer, you can even do 7 night minimum. And and people will pay. They will pay like 3K to 3,500, 4K, depending on where you are. It could even be more than that. Yeah. So those are just a couple of things that.
Thank you. And one last follow-up. So to what extent do you use like surveillance cameras on the outside, not within,
Yeah. So one of my remote on the things on the remote operating guide that I mentioned, one thing there is a Ring doorbell. I only have, like at our property right now, we have just one, and that's in front. Because you don't want to have cameras anywhere that will be considered invading their privacy, like in the backyard, for example. So let's say you have, like we have a hot tub. We have a hot tub facing the lake. So I mean, it's amazing. And as much as you say, well, it's my property, I want to be able to see. No, once you rent the place, that's now private ground. So you can't have a camera that's entrained on the hot tub, for example. But so we just have one at the front of the door where people come in, so that way, as they come in, we see who's coming in, we see who's coming through, we can see our cleaners, we can see, whoever. But that's all you want to see anyway. You don't really want to follow people around. Yeah.
Thank you so much for your answers, man. I appreciate
My
it.
pleasure.
I also have one on the garage door,
Mhm.
any kind of point of entry you may want. And then on the inside, I do have a sound monitor. So
Yes.
you can put a sound monitor on the inside and it'll monitor decibel levels, and you can set it, especially during different times of the day. You can allow more noise during the daytime, but then when it's quiet time, you want to deter some parties into the night, you can set it for that as well. So there's some things you can do on the inside.
Yeah, that is actually part. If you're doing anything in like an apartment building, and this is like for like the arbitrage folks, for example, absolutely hands down, you want a noise monitor inside. When we got the lake house here, my husband was like, no noise monitor. I was like, no, we have to. He's like, no. He's like, they can do whatever they want to do as long as the neighbors. I'm like, but you have to. He's like, no. I'm like, okay, fine. I yield. But for my arbitrage ones, that one he didn't care anything about. The arbitrage ones, which is like, if the noise gets out, then you can get kicked out by the building or whatever, then absolutely. Yeah. But it's a nice way to know if there's a party before you get to see the remnants of the party the next day. So yes. If I had my way, I'll have it in this one too, but I didn't. You're muted, Bayo.
Yes. Okay, thanks, Doc. I think you still have to tell us how we can find you. And George is going to give us the announcement for the next 2 webinars. Okay. And
yes.
then we'll round up.
Thank you so much, guys, for having me on. And those of you that have been on here, you've been amazing. I'm really engaged and all. If you would like to connect with us in our world, really the best way is to go to that link, the calculator link that I just gave you. If you click on that and you enter your info to get the calculator, right when you get the calculator, you see a page that has a link to our different things. Okay, so the first one on there is a link. If you're like, what, I think I want to do this, but I want to do this with guidance. I want to do this in a community of people that are running towards building short-term rental empires. We have a mentoring coaching program that helps people basically do this. Like I just showed you the couple that just got theirs in a 6-week window. I can't promise you do it in 6 weeks, okay? Okay, I can't promise you anything. But we have one doc that joined us in October last year, and as of right now, she has done 5 deals, different types of deals, but 5 properties right now are creating stuff on Airbnb for her. I mean, our people win. So yeah, the first link you will see there is a link to book a call with someone on our team. I have a lady called Carol who is amazing. She actually owns short-term rentals herself, and she basically helps us kind of break down the program information and kind of talks through your goals. So that's number 1. And then number 2 is that for those of you that are looking to invest passively or want to be lenders, almost like hard money lenders, like a similar thing, where we basically we personally work with individuals on our rehab deals. Right now, like I mentioned, we have 3 properties at least under contract or in the pipeline, multiple in the pipeline, 3 under contract right now that we are raising capital for, but primarily as fixed return type deals, debt. Okay, we have one of those. You see that on that link as well, a little place to just enter your information. I will reach out to you. If you want to join us in our world, on the same page, there is a link to a Facebook group. It's a Savvy Doc physicians in short-term rental, something. Physicians building wealth with short-term rentals. You can click on that link. And the last thing there is our podcast. So I have the Short-Term Revolution podcast. And so I have it on that link as well. So basically just, get the calculator and then you see all that. And I'll be really excited to get to interact with one or more of you as time goes on.
Thanks, Doc.
Thank you.
Awesome. Thank you. Thank you so much, Chagozie. I'm just going to finish with a couple of quick announcements about our next meetings. So in 2 weeks, we'll have Dr. Eric Shelley. He's a dentist, and he'll be talking about oil and gas investments and specifically what is carbon recapture and how it can impact W-2 as well as other earned income tax advantages. That will be December 17th. We'll take a break for the holiday. So December 31st, enjoy your New Year's celebration. And we'll come back on January 14th with Shannon Robnett, and he'll be talking about ins and outs of real estate syndication developments. And that will be on January 14th. That's Shannon Robnett with Vertical Equity and Robnett Industries. So some good stuff coming up, and we look forward to hosting you guys again.
Okay. Well, thanks, everyone. We're past the time, but thank you for staying. So we'll see you the next one. And thank you, Dr. Fawole. Thank you for hosting Dr. BDC Capital last week. Actually, this week, actually. So we return the favor. And this has been eye-opening for me. I've always been like, I don't want to learn any other asset class. I'm already good in storage, multifamily, and we do luxury senior living also. And and a little bit of oil and gas. So I'm like, I don't want to learn anything else. But it turns out for that cash on cash return, I think it's worth learning. So we'll be hitting you up soon. Okay. Take care, everyone.